The big thing about TaxRx Group and the work that we do is making sure we have the documentation to substantiate any tax position that we take or any tax position that we advise on it. So if there are certain strategies that you're looking at doing or you want to do, but you're not sure if you have all the documentation for, reach out to us. This is the time of year to do it before returns are filed. If this is before the end of the year, before you close out the books, before you make any final payments, want to make sure you're doing it.
Hello there, everybody, and welcome to another episode of the Orthopreneurs Podcast. Today, I'm joined with Alphonso Anderson from TaxRx Group. Welcome, Alphonso.
Thank you so much for having me, Glenn. Super excited on being here on the podcast with you guys today.
I see you've got the Ohio State flask behind you. Would never guess where you went to school. Although some people here are listening, they're not watching. So, I feel like a radio announcer. I have to describe that you have a hip flask for Ohio State over your right side there.
Right.
I think there's a lot of people out there who are going to really be intrigued by what you have to say and what you have to talk about. And ordinarily, taxes are not something that get people very excited, right?
Right.
It's not, with all due respect, it's about as flashy and cool as orthodontics. People appreciate what it is we both do, but it's not necessarily one of these sexy things that people run out and start screaming from the rafters about. But when you're bringing back money that you've rightfully earned and it goes back in your pocket legally, I call that pretty sexy, pretty flashy. And so let's start at the beginning, which is tell everybody a little bit about yourself and who you are and where you came from and how you kind of ended up where you are now.
Sure. So undergraduate was in accounting. That was my passion, my heart in undergraduate. But I decided to go to law school and got the tickle for litigation. So I was an in-court trial attorney for several years, trying all kinds of cases, from representing former congressmen all the way to murder cases, and building kind of my chops there. From there, that passion, though, for taxes, for helping taxpayers kind of kick back in. And so for the last 8 years, I've spent my time defending taxpayers against the Internal Revenue Service, so toe-to-toe with the service, either in tax court or through Internal Revenue Service audits or examinations. And so I have an LL.M in tax to kind of assist with that. And it's been my focus for the last few years.
Right on. And so I know we're going to get into some really interesting tax strategies, and we're going to talk about some things that people probably have not heard about, or if they have, they've heard bad information about it.
Sure.
But let's start here because I come from a family of attorneys. Nobody ever litigated against the IRS in my family. And so I want to ask you some questions on behalf of everybody out there. When people hear about the IRS, right, like everybody in ortho and dentistry and medicine and life, I don't want to mess with the IRS. That's kind of like the big rule. Don't mess with the IRS. You don't want to get on their radar. But when you went to court, were you going to court for people who didn't pay tax? And when I say this, I'm not saying specific cases, but when people say, I don't want to get in trouble with the IRS, I assume there's varying levels of quote unquote get in trouble where there's, what you've got has been disallowed and we're not going to approve that deduction. And you owe us, for that deduction plus some penalty and interest. And then there's probably, wait a minute, you shouldn't have done that. That was wrong. We're going to hit you with something harder. And then there's the blatant, tax fraud, right?
Right.
So can you take a minute or two to explain to everybody out there a little bit about if we just got off of a spaceship from Mars and you were going to introduce us to the penalty system for the IRS, what is it that we're really looking at as taxpayers where we have to be really worried about really getting in trouble versus things that are sort of not a big deal and that we should be going after because the worst that happens is they disallow it? Does that question make sense?
It does. And I kind of like the way you put it with those kind of three thought processes, right? And so you have those folks that are on the news blotter because they've, done tax fraud, where they've taken some action that's contrary to all the laws that are out there and things like that. And that's, a different level. So I've represented folks who've done that, where they're looking at, time and institutional system and things like that for tax fraud. But
so
what we're talking about.
Yeah, when you say tax fraud, people who did things, and I like the way you put that institutional system. I like that. They weren't put in jail or prison. They went to the institutional system. What are examples of like tax fraud? Not that I would ever tell anybody to do this. What are examples of what is considered tax fraud?
So that's putting things on your return that just aren't true. They're not true legally. These things didn't happen. These businesses don't exist. They never existed. And you're taking, tax reductions based on losses and things like that. Or you're a tax return preparer and you've done things incorrectly, things like that, or things that should be on your return, income that you made, things like that aren't being reported at all. That's when we get to that level of tax fraud, or maybe you haven't filed your return in many, many years and you have income and you're purposely hiding funds. So that's, we're talking about that apex level of those are folks that may have to see an institution at some point.
Yeah. They might get 3 free meals a day.
Right.
So we're going to put them on a meal plan. But for those cases, these are places where people are purposely trying to defraud the government. It's not, oh, crap, that was a company I didn't realize I had money in, and I made $10,000 and I didn't realize it. And, it's an understandable mistake. This is people who say, I'm hiding from the government. I made $1 million and I'm reporting I made 100,000. I got $1 million in tips, let's just say, and I reported 100,000, right? Not somebody who made $1 million in tips and reported and said, well, I think it was somewhere around 900 or 950. This is people who are blatantly trying to defraud the government, right? And
that's correct. Can't put it any better than what you put it. That's exactly what it is. It wouldn't be just an accounting error. This is somebody who's not reporting anything, not saying anything, not doing what they're supposed to do for tax purposes.
This is not the case where somebody took a $50,000 deduction for charitable donation of clothing that really was worth more like $35,000, right? That's not tax fraud. But so what's the next level below that in terms of the odds of them not getting 3 free meals a day?
Sure. So that'd be things that we're looking at where somebody has, used their tax return preparer or someone like that, and they've made just, blunders or errors on their reporting. So they've got some errors. Those numbers just don't add up to where they should be. Those are the folks that are looking at penalties and potentially interest being charged by the Internal Revenue Service.
Got it. And then is there another level where, there's just, they disagree with what you're saying, even though, or are there really just 2 levels? The level of where either A, you were blatantly trying to defraud the government and you're facing criminal charges, and then the other side where it's just penalties and interest. Are those basically the 2 different levels, or is there another level out there?
No, those are basically the 2 different levels that we're looking about, especially for the things we're talking about. It's just penalties and interest. So when we're talking about the stuff we'll communicate about today, that's the thing you're looking at. If there's an error there's an adjustment, there might be some penalties and some interest that folks would have to pay.
Right. We disagree with what you're saying. Not, hey, wait a minute, we're calling the FBI on you because you did. We're sending you some silver bracelets that we're going to put on you.
Right.
And to be clear, because again, I think this is an area of misinformation. When somebody gets in trouble, right, they did not file a legal return or whatever you want to call it. What is you always hear the story about, well, I'm the accountant. I don't want to sign that because, whatever I do is going to be legal, because if I sign it, I get in trouble. What happens to an attorney if such a person exists who signs a fraudulent return?
They would be subjected to substantial penalties in the same way that the accountant would. So we're all governed by Circular 230. It's a piece of legislation from the Internal Revenue Service that governs our practice. And so just like we have, a bar card to practice law in the state where we're licensed, there's also the guidance under Circular 230 that governs our practice, where it ensures that when we're putting stuff on returns, we're signing off on returns and offering guidance, we too, can be held liable if there are errors or if there's no reasonable basis for some of the things that we're putting on return.
But when there's a disagreement with the IRS, when they say, we're not agreeing with that information on the K-1 that you provided from this other company, in those cases, the accountant is just simply using their best judgment. And while there's no criminal liability, I assume if they do it enough or run afoul of the IRS enough, then they will get into some form of trouble.
That's correct. They could get potential sanctions and things like that for taking, unsafe or unreasonable tax positions. And so that's what they'd be looking at. But again, it's a process. It's an examination, working with the Internal Revenue Service to produce information, things like that, to determine why you took the position you took and is it reasonable.
Great. And I just wanted to get into that initially because I know we're going to bring up some concerns and questions about some of the things we're going to talk about today. And I wanted to start off with that to let people know that nothing we're talking about here could ever even be remotely construed as anything related to a fraudulent activity on any level. And that the worst case scenario is that the government would say, look, we don't agree with what you're saying here. And as a result, they could disallow something if they chose, if if they chose to. And we're going to get into that in just a minute, because we know the history at this point of the game of a lot of things we're talking about, and that they aren't a concern. But that's why I'm bringing it up, because I know there's people out there who are very vocal when they hear these sorts of things, who want to sort of paint a picture that things are going to happen that really are never going to happen. And that's why I wanted to touch base with you there first. So let's talk a little bit about, pick any subject you want to jump into first, Alphonso, and let's dive in and talk about it.
Okay, let's talk a little bit about the research and development credit.
The R&D tax credit, as we've liked to call it.
Yes, the R&D tax credit. It's one of the credits that have been out there, for a very long time, since the 80s. That is very, important for orthopreneurs, orthodontists, because it's focused really on some of the specific things you do in your practice that could really create benefit and create dollars that you're able to maintain in your pockets and be able to invest back in the practice and things like that. So I think the R&D credit is a great one to start with.
Yeah, so let's jump in there a little bit. And the good thing is, whether you've heard of the R&D tax credit out there as you're listening to this, or you've never heard of it, if you've never heard of it, then fantastic. I can't wait for you to learn about it in just a minute. If you have heard about it, it's been a big point of discussion in the Orthopreneurs Facebook group. If you're not a member and you're listening, please go join it. I think you'll find it useful. But we've had lots of discussions, in so much as that there are accountants out there who won't sign off on it. There are people who are not accountants who feel they're experts in it and say this will never pass muster in orthodontics. And so let's start, if you don't mind, explain to everybody what the R&D tax credit is and how it applies to a dentist or an orthodontist and in our space. And then we'll get into how you prepare it as TaxRx Group. What goes into that? So let's start first with just what is it, and why would an orthodontist or dentist be able to do this?
Sure. The R&D tax credit is a credit that offsets tax liability based on research being done within the practice. And when you hear that term research, it's not the same research that you might hear in engineering and things like that. It's resolving uncertainty through a process of experimentation. So it's focused on the things that you're doing in your practice, those new techniques, those new products that you're creating in the practice, or what's qualified for the credit. And so there's a 4-part test that, as long as you meet, you qualify for the credit. You don't have to invent anything. You don't have to exceed or expand the industry itself based on the guidance that's out there. But once qualified, we're reclassifying wages, potential supply costs, and some contract research expenses to be able to take a credit for those, as opposed to just using them as expenses, as expenses are an above the line deduction that reduces your taxable income, where the R&D credit, when weaponized, reduces your tax liability, a dollar for dollar reduction.
I love it when you talk like that. It's like when patients come in my office and I say to them, I say to my assistant, I want you to switch from an 016 to a 1622. I want you to engage the sevens at this point, and put a stop on the wire. The patient looks at me and goes, and now in English? But can you give me a 1-sentence explanation in layman's terms of what it really means to do an R&D tax credit?
So it's a study that's done on the practice to determine which activities qualify for the credit based on creating new processes or techniques within the practice. So things that they're already doing. Right. For example, if we think of, case brackets, we're talking Damon, Ultima, Norris, Lightforce. You don't have to have created those or invented them. But when you're starting to implement with those within your practice and in your case delivery, that's what we're talking about. We're talking about the credit, those different activities.
Right. And again, I've been fortunate enough to be around yourself and Benjamin and listen to you guys talk about this sort of stuff quite a bit, right? And I've listened and I've asked a lot of questions of you. So I'm going to translate even further for dentists and orthodontists out there in terms they'll better understand. And please correct me if I'm wrong here.
Sure.
But if I were to ask somebody who is, say, a Damon doctor, hey, what brackets do you use? They'll say a Damon. And I'll say, do you use any other brackets in your office? And they might say, well, we use a little bit of X and we use a little bit of Y and we use a little bit of Z. Okay, great. How's that going? Well, I got to tell you, I really like the Damon brackets more. Why? Well, I find I get better torque control. I find I get better unraveling, whatever the case may be. I'm making stuff up, obviously.
Sure.
At the end of the day, you're talking to orthodontists and dentists who are used to doing studies. So they think of it as being, you have to have a thesis, you have to have a hypothesis, a null. So they're used to hearing a study, meaning, I'm setting up 30 patients of one type and 30 patients of another. I have a null hypothesis. I'm going to, hopefully disprove or prove whatever it might be. And in this case, what you're basically saying is to the IRS, I used these 2 different brackets over the course of the year, or 3 different brackets, and I found I really like Damon more because here are the things it's done for me that the other 2 brackets didn't. And in essence, that was a study because you came to a conclusion at the end of the day based upon experimentation of different products, and you innovated, if you will, within your practice. Is that the explanation that I should give?
That's correct, Lynn. That's 100% right. And like you said, at that end, we're just looking to determine, did you improve function, performance,
right,
quality, reliability within the practice? And so you're comparing those 2 things to determine that, and then you're making a determination on how the practice will run after based on that. So 100%.
So for those people out there, and again, full disclosure, I have no financial interest in TaxRx Group other than you guys being one of the 60 or 70 sponsors at Summit. I always want to disclose that. But I myself and my partner, Doug Shaw, we did get involved with the R&D tax credit through you. And other people I know, many other people I know have done this, and the numbers vary, the dollars vary. What are some of the factors that play a role? And remember, people, this is not a deduction. This is a credit. And there's a difference, right? A deduction goes against your income and gets reduced at your income tax bracket. So I have a $100,000 deduction. I get, if I'm a 40% marginal rate, I get 40 cents on the dollar, so to speak, back. But this is a credit, which means 100% of these dollars come back to you, correct?
That's correct, Lynn. They're going to reduce your tax liability by that amount. So if you have $100 in tax liability and you have $100 in credit, guess what? No tax liability.
Right. And
so
people, liability means, right, just to be clear, because I don't want to be any misunderstanding based upon what you've taught me and what I've learned. If you have $100,000 in income and you have a $100,000 deduction, they'll take $40,000 from the deduction off your $100,000 liability, and you'll have a $60,000 liability. In this case, this is not a deduction, it's a credit. So if you owe $100,000 and you get a $100,000 credit, you owe no taxes.
100%. You're
okay.
Correct.
And so the difference in dollar amounts is a function of what? Why would I get 70,000 and someone else will get 25?
Sure. Let's walk through that. The R&D credit is built on a few things. And so we know what the credit is now. Well, in terms of quantification of the credit, we're looking at 3 different buckets. We're looking at the wages that you pay yourself and your staff. We're looking at the different costs of the supplies that you employ for those different techniques and processes that you're employing within the practice. And then finally, we look at any contract research expenses. So any 1099 employees that you're pulling in, anyone else that's working either under direct supervision or direct support. And those are the 3 buckets that we're looking at. So depending upon how much in wages the company pays out and those types of things will impact how much the credit is for your particular practice.
Got it. And so the things like using multiple bracket systems in one year or having lots of 3D printers, does the more stuff I do help me, or does it play a little role?
Oh, it definitely helps you. The more innovative your practice is, definitely plays into what that credit's going to be, because it's going to dictate how much of your time within the practice you and your staff are spending on those qualified research activities.
Got it. So could I, and you and I haven't talked about this, but could I say that the more I'm using of new technology to sort of determine, does it work for me, or how does it work for me, or what's the best way to use this technology, the more apt and more appropriate this is for me?
Definitely so. On each of these, we're looking at the capability. Can you do it? Can I use this in my practice? The methodology, how I'll use it in my practice. How will I employ this? How will I train on it? And then the appropriate design of it. What's the appropriate use? What makes the most sense? What gives us the best function, the best performance, the best reliability?
Awesome. So for instance, somebody who might be doing lots of different aligner cases with remote monitoring software and 3D printing for in-house aligners and using different bracket systems, perhaps, maybe virtual consultations and all these interesting technological innovations, that person is a prime candidate for an R&D tax credit.
That's correct. That's going to be the folks that we focus on, those folks that are expanding their practice, that are trying out new things, trying out new technologies and then implementing them in the practice is who we would definitely focus on for this credit.
Got it. So if I'm a CPA who works with dentists, orthodontists, or maybe I just do what I'm doing and an orthodontist is my client, at this point of the game, I'm going to say to you, as I've heard many times from many people, you know what, I'm just not comfortable signing off on this because, there's no way I can prove to the IRS that this stuff is legitimate. So my two questions for you are, number one, you said this has been used a lot in other industries. So I'd love you to talk a little bit about, how long it's been getting used in ortho. And number two, when you do this, this is just not you saying, okay, we're going to take $100,000 credit. There's some significant paperwork that's customized that you provide to people who are going to do this, correct?
That's correct. And so, in ortho, this has been around, as I mentioned, since the 2015, 14, 13, folks have been making use of this credit. There was some change under something called the PATH Act. It was a piece of legislation that said that, more industries should qualify for this credit. This is one of those industries that should be taking it as long as they have that process that we talked about earlier. And then, secondarily, it's a process that takes a lot of our time. And so the thing that you want to have is you want to have an expert like TaxRx Group who's digging into that information, putting together the documentation that you need. We usually put together our studies, and they're somewhere between 200 to 500 pages of information that documents the different things that are going on within the practice. TaxRx Group is also a company that has embedded itself with the NIH, with clinicaltrials.gov. We've taken a step further to make sure that the different things, the different areas of uncertainty that are faced in this industry particularly are what we're focused on when we're talking about the credit. That gives both the IRS and our clients a peace of mind. It would help CPAs as well to understand that we're not just picking things, roguely year over year. We're actually looking at the things that are agreed upon as uncertain in the industry to make sure that we're focused on those things and qualifying only those types of activities.
So somebody signs up. I mean, I already know the answer because we've done it with you, but someone signs up with you. You're going to get on the phone with them and or Zoom with them, and you're going to ask them a million questions about their practice, right? You're going to ask them about their employees. You're going to ask them about their wages. You're going to ask them about what techniques and materials and everything else that's going on. And then you're going to create between a 200 and a 500 page document that if this was challenged by the IRS and said, how did you come to these numbers? You're going to give them this tremendous file that's customized for your practice. So to be clear, this isn't, I'm just taking a credit. Oh, well, we do a lot of innovation. This is a well thought out plan and process that you give, and they would have to refute everything in that page, correct? That they'd have to come up with a reason why they would in the crazy concept that they would read the 500 pages and then dispute the 500 pages. They would have to be able to come up with an argument against all the claims you make in that document, correct?
100% correct, Glenn. And that's qualification and quantification is what we do really well at TaxRx Group. And Ben Dykes, my partner in the practice, is a former dentist and an attorney who identified different things within the practice, which we would identify when he was practicing. And so on the front end, in terms of the expertise, the subject matter expert who understands kind of what's going on in the orthodontist practices, what things are related to uncertainty, what challenges someone would face with technique changes, things like that, is on the front end. So that's qualification. So we're going to do that call, as you mentioned, and walk through all those different areas of the practice. Who's doing what amount of time is spent on those things. And then we're going to get to quantification. Quantification is when we deal with what those costs are, what those wages are, and things like that. And then all of those things run through our process. We've got a software that we've developed that allows us to kind of move faster, allow our doctors to kind of get that information in, participate in their survey to make it specific to what's going on in their practice. And so instead of just a out of the box, hey, here's a study for you, file this on your return, this is something where we spend detailed amount of time working through your specific practice, understand what you're doing, what aspects qualify, what doesn't qualify, and then putting those numbers together for the service.
And you get paid basically as a percentage of the credit, right? So people aren't fronting money to you per se. It's a function of whatever you get back for the client, you get a percentage of that amount, correct?
Right. It's a blended hourly fee that ends up largely being close to a percentage of the overall credits. And that changes depending on the taxpayer, depending on the year. I know there are other things we're doing with that, but yes, 100%.
Fantastic. And last but not least, just because you are a CPA, right? You're a CPA or no?
Accountant. Accountant by background, but
accountant by background, but an attorney by trade, and license. In the clients that you've had in TaxRx Group, how many have ever been audited for this, and how many of those who've been audited have been found as having had an inadmissible deduction there or credit?
Sure, great question. And as a tax attorney, I wish I could have more so I could go through more of these, which is cringeworthy for our clients, but we haven't had any selected. And that's a tribute to the work that we do on the front end, putting together that information. So we haven't had any clients get selected for examination from orthodontists. We don't have any files that we're working through with that. And we expect to keep that pace as long as we keep putting documentation together that supports it. But when we do have clients, if we do, we'll be representing them fully. All of the work that we do comes with an audit guarantee where you get a licensed attorney defending you. So not someone else or an accountant or someone like that, but your attorney defending you all the way through that process.
But it hasn't happened yet.
Has not.
But I believe it has been challenged for a dentist at the state level at some point, correct? I think
Yes.
It happened once. And I can dentistry and ortho are very different in many respects. Do you remember what the details of that outcome were?
Sure. I don't know what the exact amounts of the adjustments were. So everyone listening to the podcast today, think back to when we talked earlier about folks who are tax fraud, where we think they might be in an institution somewhere, and folks who just have an adjustment. This was a case where it sounded like the dentist may have kind of overstepped what they were taking. So the amount of the credits may not have been reflected in the numbers. The service may not agree with that. And so it just ended with an adjustment to the amount of the credit. Still qualified for the credit, still were able to make use of the credit. It just reduced the amount. It may have came down 20 or 30% of what they originally filed on their return. But again, it's what we talked about. It's not something where someone went to jail or someone got picked up with the nice metal handcuffs to go to jail or anything like that. It was just an adjustment on their return after an examination.
Cool. Yeah. No meal service.
No meal service.
And so, great. Now, we've sort of talked a great deal about that. I know you've got at least one other thing to talk about relative to tax credits or what have you. What else you got on the agenda?
Sure. Let's talk a little bit about the employee retention credit.
Employee retention credit.
Sure. The employee retention credit was a credit that came out because of COVID-19. So this was a credit that was implemented to assist taxpayers who kept their practices, kept their businesses going during the heart of COVID-19 in 2020 and 2021. And so it's a credit against your payroll taxes. So it's on your 941 payroll taxes that you pay. But the important thing about this credit is it could be $5,000 per employee for the entire year in 2020. And then in 2021, it could be $7,000 per employee per quarter. So a very impactful credit that allows businesses to invest back into the business after kind of suffering through COVID-19.
And so who does this benefit the most? Is it somebody with a big team, somebody with a small team, or is it equal proportionately for everybody?
It's equal proportionally for everybody because, if you have a smaller practice and you have a lesser amount of employees, that wage that you're covering with the credit is going to take care of those employees. And so for a larger practice that have more employees, they need to take care of those employees as well. So it has an equal benefit across.
Nice. And in terms of that, is there an interview process associated with it, or is it just, well, let me see what your wages are in W-2s and let me work through it, and then it's just written up?
So there's definitely an interview process with it. And there are a couple ways to qualify for the employee retention credit. So different than R&D, there is an interview process because the two ways you qualify is if you had a revenue drop of either 50% or more or 20% or more in 2020 or 2021, as compared to the same quarter in 2019, you can qualify. And we saw a lot of our CPA partners, a lot of our accountants, payroll companies calculating the credit for those taxpayers. But one of the things in our industry for our orthodontists and our entrepreneurs is that you guys had billing, right? You have, accounts receivable and you had monthly billing that went out to your clients. And so during the pandemic, you wouldn't have experienced a revenue drop like that because you were, kept up by that billing structure.
Right.
Where on the other side of that, the secondary way to qualify, where you need that attorney support, you need that legal analysis, is for those taxpayers who, because of a government order, had to modify, suspend, or partially suspend their practice due to a government order and had a more than nominal impact. They qualify for the employee retention credit. And that's something that payroll providers, some CPA firms, some accountants couldn't do because it required a legal analysis of the orders that were in place during that time to determine who qualified and what was the impact of those orders. So think about if you had the ban on elective procedures, right? And that was usually in the second and third quarter of 2020, where no elective procedures could move forward based on the government ordinances that were in place. Those are our taxpayers who are potentially going to qualify for this credit. And where we want to spend our time then is analyzing what those orders were and then how they impacted the practice. Did it reduce the amount of patients that you were able to see? Did it change the way you conducted visits where you had to social distance or space out appointments and things like that? And so it's very important. It's a very important and impactful credit for those taxpayers who suffered from those things during the pandemic.
Nice. Wow. Any other so we've got the employee retention tax credit.
Sure.
And we've got the R&D tax credit. Any other credits to talk about today, or did we want to jump on to that next topic we had discussed earlier?
We can definitely move to the next topic. I would just say, as we're closing out on the employee retention credit, just keep in mind, folks, that the amendment period for the employee retention credit was 3 years from when those returns were due. So if you had bans on elective procedures in the second quarter of 2020, that's going to expire in the second quarter of 2023. So if you haven't looked at ERC, definitely need to do so in the next few weeks.
Right on. And so last but not least, I don't know when exactly this podcast is going to drop, right? Because they never happen on the day we interview. So it could be before the end of the year. It could be shortly after the beginning of the new year. But as an attorney involved in tax, what's the best advice you give people right now?
I'd say dig into your active tax plan. Plan out, talk out if you can, what's going on this year, what changes happen within the practice. There are certain strategies that we always talk to our clients about. The Augusta rule, which is 280 in the Internal Revenue Code, renting out your own practice, hiring your own employees, family as employees or kids or family members, things like that. Make sure you're thinking about those things. And a lot of you who are listening today may already be doing some of those things. Your accountant may be doing some of those things, but one of the things to look at is, do you have the documentation for it? The big thing about TaxRx Group and the work that we do is making sure we have the documentation to substantiate any tax position that we take or any tax position that we advise on it. So if there are certain strategies that you're looking at doing or you want to do, but you're not sure if you have all the documentation for, reach out to us. This is the time of year to do it before returns are filed. If this is before the end of the year, before you close out the books, before you make any final payments, want to make sure you're doing it.
Nice. Yeah, I know so many of the cool things you guys talk about. I don't want to get into it now. I want to keep it sort of as like a little secret without a spoiler alert. But the Augusta rule is beautiful because what's the number of the max that your guys like 2,500 per day is about the maximum, give or take?
Somewhere between 15 to 2,500 a day. Yep.
Yeah, but I don't want to get into that. But it could be a $25,000-$30,000 a year deduction just for owning a home and going and using it in a certain way, which we'll get into in another podcast episode. I love it. It's a great idea. And again, there's a million things you could be getting involved in right now, or getting ready to get involved with to make your tax burden considerably lower for 2023. And to quote Ben Dykes, your partner, I love the fact he says, because people say, well, it's free money. It's not free money. And
Correct.
Ben gets really angry when you say it's free money. It is money that you've already earned, that you worked hard for, that you want to get back. It is not free money that's coming out of nowhere that just suddenly was showered upon you. You went to work and earned this money. And I know that the mission of TaxRx Group is to make sure you get back every penny you are legally entitled to get. And I really appreciate that about you guys.
Yes, no problem. I mean, the explanation of it is spot on. That's what we want to do. We want to take care of our taxpayers, find that proper prescription for what they need in their practice specific to them.
Yeah, I've spent a little time with you guys. I learned a little bit too. And so before we go, if people do want to get a hold of you, two questions. Number one, what is the process typically if somebody says, wow, that sounded interesting, the ERC or the R&D tax credit, those sound interesting to me. What's the first step? And number two, how do they get a hold of you?
Sure. First step is just reaching out to our team. We've got a great team that'll get a call scheduled, as we talked about, to start talking through our process, talking about what documents we need. And then folks who are listening today, you can reach out to me at Alphonso, ALPHONSO, at TaxRxGroup.com.
Alphonso at TaxRxGroup.com. And so I can just tell everybody out there, like I said, I have no financial interest whatsoever in TaxRx Group whatsoever. I just really enjoy connecting people. And I met you through somebody else who was using you, and we've been really happy with you so far. And I just wanted to put that out there for everybody so that they get some great information and hear from an actual litigator, somebody who's gone toe to toe with the IRS, what he's talking about. This is not your friend saying, I wouldn't do that, it doesn't work, or another CPA who doesn't do it saying, you know what, you're going to get in trouble for that. You just heard an interview with an actual litigator who's gone toe to toe with the IRS, who has told you his experience and why he does what he does. And for more than that, you need to call him, reach out to him, Alphonso at TaxRxGroup.com, and just talk to him. And I just want to say, Alphonso, thank you so much for being the gentleman you are and for being on the show today and for offering all this great information to people.
Thank you for putting this podcast on. And I hope that all your listeners are able to make some use of it. And we're here. Guys, just reach out with any questions you have.
Right on. Have a wonderful day, and thank you for everything, Alphonso.